What? Why is the bond market doing what it's doing, and what does that signal about attitudes, not just in America but around the world?
So typically, when there's time of stress, as we kind of talked about earlier in the week, that you see bonds rally, yields go down as a safe haven, as the corner for the financial markets across the world. You buy the treasuries. You saw this decoupling start at the beginning of the week, which we've talked about as well, where yields started to go up, which is very problematic. One, for if you're trying to have manage the economy, keep it from recession, and two, the price action is very odd and against kind of norms of throughout history. So you're watching that. It's putting pressure, one, on corporate balance sheets. It's putting pressure on all sorts of different models in terms related to that, in terms of auto loans, valuations in the stock market. And the fear became that, one, because of the volatility that we saw in the market, that there was forced unwinds by hedge funds and other leverage players in the treasury market. But then the bigger thing was the weaponization of the treasury market by potentially China selling, their holdings. They have over 850 billion of treasuries. And if they were selling that, they would put pressure on the bond market and cause that price action to happen. And obviously, it was a very big concern to the Fed and the rest of the markets.
So, Johnny, the counter is, yeah, but it'll stop. They'll calm down. As soon as the deals start getting made and the tariffs, everybody gets comfortable with them. This is America. Everybody wants to be here.
I mean, long term, yeah, you hope that happens, but there's destruction. There's a car wreck that's occurring, right? And there's damages that happen. And if you have this flight of capital out of the U.S., which we are seeing in the data, whether it's selling out of stocks, selling at the dollar, things that you highlighted, then those are the creditors to our country. That you don't want to have break down. So these are ripple effects. These are butterfly effects that are associated with that. And these violent moves in the bond market are not healthy. It's why today you had the Federal Reserve president of Boston, Susan Collins, come out, and she said the Fed is standing by and ready to support the markets. That is not a positive sign when that happens. It helps the market stabilize, but they're saying that because they're concerned about what's going on and the price action that they're seeing.
All right. Spencer's nodding like you're making sense, so I'll assume that he's right. Spencer, for you, let's put back up this graph. Ben, Dusty, put up the graph about the trades right before he made the announcement. Not that one. The one that circles the trades. Yeah, there it is. All right, good. Thanks. So, Spencer, what is the argument to be made that ain't normal right there? That's not just you guys being smarter than the average bear.
Well, Chris, thank you for having me on. Johnny, nice to see you. Listen, I cannot obviously definitively say anything happened. There is no evidence at this point in time to clearly suggest that any of this was anything unusual. But typically on midday, that's usually lunchtime on Wall Street. That's when option volume tends to be the lightest. It is pretty atypical to get a 10x surge in option volume, especially to the upside on something as broad as the S&P 500. And then just the fact that, it was 10 minutes prior to a pretty massive announcement that moved the markets substantially. So again, I cannot say anything, but the picture somewhat paints itself right in front of us.
So you don't think it's wrong to be asking the questions. And when you listen to Johnny, what's your fear about what happens going forward, no matter what kind of deals Trump is able to make?
This is much more important because this affects everybody. This affects, the equity market is a lot more important for investors because that's where, higher returns are. But the credit market, the bond market, not just the treasury market, but the corporate bond market is what affects the entire economy. Commercial banks lend based off of it. It's what the central banks actually look at. As Johnny alluded, Susan Collins, made some alarming comment today. Your mortgage is based off of it, your auto loan, your home loan. The companies we all work for get their short-term funding, which is called commercial paper, from this market. If we see dislocations in the corporate bond market, that is a massive, massive problem. This week, even earlier this week, as treasury yields were falling, credit spreads were rising significantly. That is not a good sign. That does not usually happen. That is a sign that banks may be becoming fearful to lend. Banks, all this uncertainty is hurting. So picking up just on what Johnny said about and he's totally right about foreigners exiting, which it looks like it is happening. Even just domestically, there is so much uncertainty for banks and for lenders that, again, like you were saying in your opener, yeah, we may get some deals here on tariffs, and I hope we do, because I agree with the president on some stuff, specifically with like pharmaceuticals, with military production. But at what cost? At what cost is my question. And the cost cannot outweigh the benefits ultimately.
Johnny, for non-MBA people, what is your biggest concern that you're watching for in the coming weeks?
I'm the rate market. This is the focus, and VIX, right? And to continue to watch how that moves around. 30% of treasuries, 30% of corporate bonds are owned by foreign institutions. They're a big part of the market. This is an issue for us from exactly what Spencer said, and that's got to be the focus. Stocks are going to move up and down. We've seen a correction already kind of occur there, but the bigger concern is the rate market and how that functions, and that there's liquidity there and people can finance themselves, and that's the focus that I'm going to watch. Is on my radar right now.
Hey, thanks for watching. Go to joinnn.com to find NewsNation on your screen. And don't forget, click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.